Michelle Graves, your host on The Power of Money, and I'm honored to have you as a part of my world in this coming segment. With The Power of Money, as you know, we are interested in three things. First, that you get the necessary education so that you and your family will have the information to do well in these difficult times. The second thing I'm interested in is for you to be empowered to prosper. I want only the best for you, but you can't get that if you don't have the education and then the drive to make it happen. And the final thing, and perhaps the most important thing, is that you be energized. Because life is more than a journey. Life is about living. And so I want you to learn these things and to be empowered and encouraged and energized. I'm Michelle Graves. Now here we go. And here we go on today's segment of The Power of Money. My subject matter today is the banking industry. What next? And you see I got my glasses on because today is about some information that I'm getting ready to release, unfold, so that you guys will be aware. Remember, the goal in 2023 is first, you want to be awake. Okay? Don't let stuff come up and you are in shock. And then once you're awake, you want to be aware, okay, which is, oh my. And with awareness, you have to be prepared, and the third A, alert. So it's about being awake, which is, I'm not going to sleep through this one. And again, there are diversity of opinions, and people can have their opinions, and that's fine. Humans always have. But to not be awake, which means I'm informed, I know what is going on out here reasonably. I mean, you can't know everything, but you can know enough to look out for yourself and your family, which is the focus for the last 9 years here in Dayton at DATV with this show. And prior to that, I've been in television since 1982. And so I've been informing people for a long time, and now it is upon us. That's what I told you all about. 2023 is upon us. The reset, both spiritually as well as globally, the Great Reset, which is everything that you thought you knew. Forget it, because you don't. But I'm going to do my darndest. I am committed to do my darndest to keep you aware, to make you alert so that you can begin, if you haven't already begun, because this is stuff that really should have been in motion a couple of years ago. But now it's all aggregating. That's the law of physics, by the way, which was one of my favorite subjects in high school. So, why do I have on glasses today? Because, madam and sir, when you come into my office, I am not banging, I am business. And I've got a lot of stuff I want to share, and I'm just going to deal with you guys as if you were coming into my personal office for consultation on, Ms. Graves, what the heck is going on with the banking industry? Now, let me say to you before getting into this, again, this is my industry, okay? I didn't work for a bank. I bought banks, okay? That was my specialty, was mergers and acquisitions for two of the largest corporations in the world. Yep, there was a black woman. Can you believe that? Way back. And I didn't go to grad school for banking. I went to grad school for economics. and international finance and minored in biochemistry because I've always had a fixation with rats and research, and it's made me really kind of picky in my analysis because you just can't tell me stuff. I've got to be able to vet it, research it, and then vet it some more. But in college, I took a number of courses dealing with money and banking, not thinking as an economics major in undergrad that it was going to all come home. And it all has. So I've been a banker in terms of acquisitions and financing the purchase of banks for other banks, and globally financing for capital expansion projects, et cetera, et cetera. It's too boring. However, I got boots on the ground inside of the bank, a real live bank, using my experience in strategic acquisitions to prepare this bank to be purchased by another bank. And so I've continued to know the industry, know the issues that banks have, not just in the United States. Banking is a system. Okay, it's a system. It goes way back before the 14th century, which is how do we pay for things? Okay, so you got a cow and I got chickens, and how do we make this work if I want to buy a tractor? Global banking. The intermediary, the guy that, ooh, I feel it, I feel money, I feel it. Yeah. A lack of understanding of banking today is going to cost you big time. Because banking and insurance are the oil that greases the wheel of capitalism. Yeah. They are into everything. Everything. Insurance companies are just bigger banks. They don't have the accountability that a bank has, but they're still monsters in the global market in terms of finance. You will not play ball out here without one or the other. But today I'm focusing on the banking industry because that impacts on most people on a daily basis. Your money goes into the bank for deposits, you have loans, etc. So what is a bank? Let's start with that, because in the time I have, I want to cover what is a bank, what are the types of banks. Then I'm going to talk to you about what makes banks different. Really. And then finally, if I have time, I'm going to talk about what happened to First Republic Bank, which failed. It was number 3 on the big list of bank failures. And it's a case study on why we have harder times coming. Now, I'm not trying to flaunt any predictive value. As I tell folks, no, I'm not a prophet. Well, how are you always able to call it? Because I'm detailed. And I look at things and I assess things and then I say things. As I said, when I made the predictive call about inflation that nobody was talking about 2 years ago, and I was saying, oh man, I hope this doesn't happen, but it is. Why? Because of the stimulus checks, all that money out here chasing few goods, and here you go. I mean, the government was printing money, printing money like crazy, sending checks like crazy. And the outcome is inflation, which is a bend over and take a whooping type stuff. I don't have any answers. I do know this as a banker and an economist that you can't live with inflation without setting into motion everything that causes political unrest and uprisings. Why? Because inflation impacts most immediately on your food. And folks, I don't know if you've ever had a hungry belly, but if you've ever had a hungry belly, it will make you turn into a critter. Rabbit, a critter. You can't be hungry because you're going to do something to deal with the hunger. And so food, which is essential to human life, when you can't afford to eat, to live, then something's going to happen. So inflation is a real live disruptor. Somebody didn't create it in a big ball. It's the direct result of tons and tons of money chasing few goods. And then we have other things that spring from inflation. How does all this relate to banking? I'm getting ready to tell you. Okay, I'm trying to lay out an economic system that works so that you can look at the world and say, oh, I get it. When Russia did that to Ukraine, I said, oh my words. Why? Because I said then, we got inflation and now we got war. And I'm telling you, we're all going to get sucked into this mess, really. And I said openly, my prayers are for the people of Ukraine, but I'll be the first to tell you, political science is not my forte. I don't know why Putin did it and why he's still doing it. I just know that Ukraine provided food for most of the world, Africa, Asia, and Europe. That country, along with Russia, were essential. So the fact that they were not able to do this was going to immediately impact on prices. You can't get sunflower seed oil, a whole lot of things we take for granted that are essential to other nations and nation states. People have to eat. These dictators, these kings, they know you better feed those folks and their children, or else you may not have a job, dude. Okay? So it's all interconnected and interrelated. But the medium, the mediator who makes it happen and go is the bank. So let's get it with it. What is a bank? A bank is a financial institution that is licensed in our country, that's what I'm speaking of, to accept checking and saving deposits and make loans. So they bring in money and they lend money out. They also provide related services such as individual retirement accounts known as IRAs, certificates of deposit known as CDs, currency exchange when you're exchanging dollars for another currency, if you're traveling, essential, and safe deposit boxes, which are extremely powerful because you put your items in a safe deposit box and you pay a fee, but your items are protected. Okay, forget all of the Hollywood scenarios where people go into safe deposit boxes and just take stuff. It does not work like that. The safety deposit box is your personal vault inside of the big vault, which is the bank. Okay, so, and there are several types of banks, including retail banks that cater primarily to consumers, commercial or corporate banks, and investment banks. Each one of them has a niche, and it's very specific by charter what they do and they don't do. Some banks, and I tell this to consumers all the time, if a bank specializes in business and commercial lending, don't expect a whole lot of products that appeal to you as a consumer, such as mortgages and credit cards. Now, I'm not saying they're not profitable, but I'm just trying to share with you these are the types of banks. In the United States of America, banks are regulated by the national government. You can call it the Office of Comptroller of Currency, which is responsible for oversight of federal banks, and by individual states. States can also oversight banks. Okay, frankly, I feel a whole lot more confident than a state. In Ohio, we had a major bank failure that was not a federal bank. It was a state bank. Can't remember it now, but people were in line trying to get their money. So what do we want to focus in on? What is a bank? It's a federal institution. It receives deposits and it makes loans. So it literally, why do they make loans? And who do they make loans to? Well, you go to the bank because you can't finance it yourself. Okay, so that's most people. They say, well, I'd rather use somebody else's money. Well, you can, and there's nothing wrong in a capitalist system with doing this. Even the Chinese, who are communist, have banks, the Chinese banks. They lend, they govern, and they do stuff. So, again, the purpose of a bank is to provide a safe place for consumers and business owners to stow their cash. Yeah. I mean, you can always dig it up under a tree, but a bank is, again, a pillar of stability and safety. So when you say, I'm going to put my money in the bank, you're not expecting to have a problem when you want your money out, okay? Again, it finances personal purchases. Why? Because you don't have the money, all right? Because remember, this is a debt-driven country, and it's biting us in the butt right now. Oh, chomp, 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 chomp. Debt is what is the underpinning of our nation. What kind of debt? You name it. Credit cards, mortgages, cars, furniture. It's all based on you not having the money, but you wanting the item or asset, and the bank will give you the money, but it won't be free. Why? Because that is an institution that makes its profits on your indebtedness. Okay? For real. That's how they make their money. So, how do you open up a bank account to stash your cash and borrow money? You go to online, which is a fairly recent phenomena, or you go to the branch to do that. Checking accounts are pretty standard for people, and they're deposits by consumers and businesses to pay their bills and make cash withdrawals. They pay little or no interest. A bank's not going to pay you much for putting your money in a checking account because your money does not stay there long enough. We call it cycling. And Out of your checking, you typically have to pay monthly fees, usage fees, or both. Rarely do you have a free checking account. Now, things are changing. Banks are willing to do free if you have a lot of money sitting in the bank. Typically, they have a minimum 250, 500, has to sit in the bank. Can't be cycling, okay? So typically with consumers, when you talk about checking accounts, we're talking about paychecks and other regularly deposited items, your Social Security, your investment dividends, those type of things will automatically go into the account, and that's called your checking account. Your savings account is a little bit different. First, because they pay interest, which is the cost of the money. That's interest, okay? Everybody needs to understand that the entire underpinning of the bank is interest, okay? Which is what they pay you if you're a depositor, not much, but it's also what they charge you if you are a borrower. Now, if you're talking about holding your money for a long time, a certificate of deposit, which is just a guarantee, is usually a 3-month or 6-month or 12-month. It can go as long as 5 years. But again, the interest calculation is right there when you do the CD, and frankly, they haven't been paying a lot lately. Nope. Anyway, it's important to know that all these monies are insured by a federal agency known as the Federal Deposit Insurance Corporation, FDIC, and the rules were, if you're in all of these different things, the maximum, that's the maximum, is $250,000. So if you've got $1 million in a checking account, and believe me when I tell you, a lot of people do, and something bad happens, the government is only accountable to you for $250,000. Okay, the rest of the money, well, have a nice day. Banks also make loans. In fact, that's what drives the industry. The loans they make are deposited in typically a checking account. They accrue interest. At the highest level, and hear me well, it is this lending activity that keeps our economy going. And that is, people put their money in the banks. The bank lends the money out for car loans, credit cards, mortgages, and business loans. The loan recipients spend the money they borrow. The bank earns interest on the loans, and the process keeps the money moving through the system. Are you all getting what I'm saying? Because this is so important. The bank functions as the intermediary for the flow of money through the services it offers and the products that it makes available. In the case of you depositing money, you're not going to earn much, but that money is going to turn around and be loaned out for a variety of things, including your purchasing of items on credit cards. All of the top banks, in fact, there are over 4,000 banks, period, in the United States, last count, they make all of these services readily available because, again, that's a lot of money when you start aggregating and looking at how much money you've lent out and how much money is coming back and how it's enabling other sectors of the economy to prosper and grow. For example, if a business owner is growing and he doesn't have enough capital money to facilitate an expansion of the facility so that they can hire more people, that's good for the economy, so that they can get purchase orders filled, that's great for the economy. And again, it's about money borrowed, money recycling, or money cycling, and the economy growing. That is a rule. Money that does not move does not grow. It does not. And for a lot of people, they're like, well, I want to make money. And I'm saying, okay, you do. And there are institutions that have been around forever doing just that. So there are two types today. Brick and mortar, which is what we call your standing banks, and your online banks. The brick and mortar can be your local small community banks, and they can go on to our global commercial banks, Bank of America, Citicorp, Wells Fargo, Chase, mega banks, big boys in the United States, Bank of England in England, again, Bank of China. These are mega banks that move money, because money has to move. It has to move. It has to be loaned out. Money has to be earned on the money loaned out. Things have to grow, expand. And so a bank provides a vital connection for everyone. Most people, their Social Security checks are deposited at the bank. IRS checks are wired to your account attached to a bank. These are things people don't really even think about, more or less ask questions about. But I wanted to make sure that you understood from where I'm talking. Now, how are banks regulated? Banks, as federal institutions, are regulated and may be regulated, depending upon their business structure, on a state or national level, or both. State banks are regulated by each state's Department of Banking or Department of Financial Institutions. The agency is generally responsible for issues as permitted practices, how much a bank can charge, and auditing and inspecting banks. Now, I want to kind of make you aware that there are certain states that allow banks to charge prohibitively high rates of interest. And it's allowable because that is what the guidelines are for that particular state. So you may get solicitations in the mail, and that's why I tell folks, you better read what it says, because they're required to disclose to you terms and conditions before you go any further. And some of them, the interest rates are, on credit cards, staggering. I mean staggering. But so many people are desperate to say, oh, I got this card. And I'm like, I don't know why you're excited about that. Well, they're going to let me borrow $1,000. Oh, really? They're going to let you borrow $1,000. That's how they make their living. Okay? And for depending upon the interest rates they quote, because the higher your perceived risk of repayment is, the more they're going to charge you. Prime, clean, credit-driven clients get the best rates and terms. That's perfectly balanced, and that's global, by the way. Corporations that don't have good credit are going to have problems unless they have offsetting collateral. Okay, a bank is not going to just extend to you stuff because you're a nice person. That is an industry, as I tell anybody, cutthroat and brutal. Because just like they loaned it to you, if it's not paid on a timely basis and you violate contract, oh yes, you sign a contract. If you got a mortgage from any bank, What do you think all that paperwork was? Because somebody just liked to type? That paperwork is legally valid and binding. And if you are non-compliant with the terms of the agreement known as the contract, then they can take your stuff because it's not yours until the terms of the contract, including full payout, are satisfied. So when people say, I got a new home, I want to bust out laughing. And I'm like, oh, do you buy it, the whole home cash? Well, no, my bank financed it. Then your bank owns it. Yeah, how you like that? How does that make you feel now? Because you can look around at all these lovely things, and as I would tell people, until the final payment is made, guess who owns your home? The bank. The bank. That's collateral for the loan that they made you, and that is how that system works. Very efficient, because when you become a homeowner, that means you're going to also want to buy lots of things to furnish the home. Remember, we're debt driven, which means bank debt driven country. You use your credit card to buy furniture. Use your credit card to buy drapes. Use your credit card to buy multiple TVs, carpet, everything. Everything. A typical home is at the behest of the lender, because everything in that home, for the most part, has been financed. Even the carpet. 2 years, same as cash. Okay, so the manufacturer works a deal out with the bank, and they're willing to extend you credit, okay, with the carpet, believe it or not, as collateral. Oh, they wouldn't show up and take my carpet. Oh, yes, they will. Are you kidding me? Come on, pull up your big boy pants. This is real stuff. Again, retail banks offer all kinds of services to the public, and they typically have branch offices as well as main offices for the convenience of their customers. And they provide a lot of consumer-driven products. Okay, they also offer specialty services for their higher net worth people, such as private banking and wealth management services. So, what are some retail banks? TD Bank and Citibank. Now, let's get to where the money really is made. I'm talking about real money, not the money's play. Commercial or corporate banks tailor their services to business clients, from small business owners to large corporate entities. Along with the day-to-day business banking, they also offer credit services, cash management, commercial and real estate services, payroll, which is a big one. So companies will deposit large amounts of money into their accounts, and payday, that money is extracted from the account to cover the payroll, okay? That's very big, very, very big. Companies have thousands of employees, their people have to be paid, okay? If a company's running short on money, many times they can get a loan from the bank to cover them. Didn't say free. Nothing at a bank is free. That's counterintuitive. Really? Some of our big boys that are strongly commercial are JP Morgan and Bank of America, although they both have retail components as well. Then you have investment banks, and they function as financial intermediaries, facilitating financial transactions such as as facilitating mergers and acquisitions. They finance that, okay? Their clients are large companies, pension funds, governments, and hedge funds, okay? Morgan Stanley and Goldman Sachs are investment banks, and they're big. There used to be more, but after 2008, things changed. So, is a bank a credit union? No. No, it's not. For starters, credit unions are non-for-profit institutions that were created for and managed by their members, okay? They do provide routine bank services to their clients, who are generally called members. They're created, owned, and operated by their members and are generally tax exempt. So members can purchase shares in the co-op, and then the money is pooled together to fund the credit union loans. They offer a much limited array of services as compared to banks. And if you look at your credit union checking account, it's clearing through a bank. They're not federal institutions, okay? And while they do offer a level of regulation, just remember they're member-owned opportunities, okay? How do I like credit unions? I think they're great, within limits. And when I say within limits, years ago, credit unions were just kind of like mom and pop. Not today. You got big boys. They've grown, they've expanded, and they do a lot. But again, if you want a touchy-feely, I'm going to say you need a car loan. They do not, just because they're non-for-profit, they do not specialize in bad loans, okay? These guys are bankers. They just happen to manage a credit union that is membership-based. Should you bank at them? Whatever you fancy. I like them. I've done both. It's okay. I'm okay. When you know capacity and limitations, that's what you do. If you're a business owner and credit unions are going after business accounts, just be aware that, again, the money is coming from a bank, okay? The clearinghouse is going to be the bank. Yeah, and why is that important? Because the Fed tracks money. Who's the Fed? The Federal Reserve, the people that set interest rates. Yeah, they do it. Banks, again, are part of a much bigger federal system, and they have rules and regulations, and they have annual inspections, they have annual audits, they have all kinds of compliance things to make sure that they follow guidelines. Serious stuff. We're going through it right now. How do you know if your money is safe? Well, the truth of the matter is if you have $250,000 or less in deposits, you're up under the FDIC, which is a government agency that supervises and examines banks to ensure that the money they handle is safe. They're just not out here winging it, okay? They're going to get, if they are winging it, it's going to happen. Everybody's going to know because there are no secrets. Stuff may happen, but again, it's pretty visible. Non-bank accounts, well, that would be like stocks, bonds, brokerage firms, etc. Again, these are up under the Securities Investor Protection Corporation, the SPIC, and its job is to recover cash and securities in the event that a member brokerage house fails. Okay? It's just important to know that the SIPC is not in banks, it has to deal with brokerage companies. So who do you want to deal with? You got choices. You have choices. Do I deal with a retail bank, a credit union, or a commercial bank? It depends on what your needs are. If you're a business, you probably want to be with a commercial bank. If you're an international business, you'd want to be with a commercial bank that has international tentacles, such as JP Morgan. But again, all of these banks, and I'm just telling you, they all interface and interact with each other as a part of banking. If a bank falls short, they can always go to another bank and try to get money. It's usually overnight. Works very well. They can also go to the Fed, known as a discount window. They'll pay interest. That's correct. Banks charge interest to each other. How do you like that? If you go to the bank to borrow money, it's not free. You're going to pay interest on the money, even if it's for 24 hours, so that your balance sheet can stabilize. Nobody in this industry does anything free. Nobody. Period. And believe me, that's saying a lot. So how do you pick a good bank? Well, I always say it depends on what you want. I have several accounts. I have a community bank for my small money. I have a commercial bank for my corporation's money, payroll, etc. Okay, so I have two banks. The small bank, I don't have a lot of expectation for products, but I just like them. They're just friendly. Okay, I like them. So I'm giving you an overview of the bank. Now let's talk about what happened, and what are we dealing with now? I'm going to share with you something that you probably have never heard of, but you are more than welcome to research it, and that is fractional reserve banking and how it works. Banks do not ever lend 100% of their deposits on a loan. They only lend out a fraction of the bank deposits, and they're required to be available for withdrawal. They only need to keep a specific amount of cash on hand, and they can create loans from the money you deposit. Fractional banking. It frees up capital by not lending everything out. Today, most World Bank systems operate on fractional reserve banking, where they don't lend out all of their deposits. Okay? In addition to which, when they do lend out, banks are required, based upon lending experiences in the industry or at the bank, to set up what is known as a loan loss reserve. That is a reserve of money to anticipate the possibility of a loan going sour. Now, some loans are more prone to go sour than others. But the key thing here is that a bank is never going to be 100% on the hook for you if you are depositing there. Same thing if you are lending. Most banks are required to keep a certain amount of their customer deposits on reserve, just in case there is a run. Because if there's a run and they don't have there available the monies to pay, then that's going to be a big problem. A big problem. It's called fractional reserves. And in March of 2020, the Fed, remember that name, set reserve requirements for all of its depository banks to zero, meaning you didn't have to do any reserves in case of anticipation of a run. I suspect they're going to make some changes on that. So that's where we are with that. It's really important to understand that interest rates are set by the Fed, okay, not the individual bank. The Federal Reserve, when you see interest rates going up, you need to be getting nervous because the Federal Reserve governs the banking system, okay? The U.S. Treasury may print the money, but the Federal Reserve sets the interest rates, also governs, also audits, also sets standards for compliance. They're not a joke. This is why I shared with people over 2 years ago that, like it or not, rates were going to go up because inflation will not be tolerated. Inflation erodes every dollar you make. Look at your paycheck. Does it go further today than 2 years ago even? No, because inflation has made everything more expensive and your wages have not increased significantly to offset that expense. Therefore, the Fed says, enough. We are going to institute what is known as monetary policy. We're going to set interest rates to quell down this thing called inflation, okay? If businesses have to deal with inflation, they're going to have to make some hard decisions about whether I need to keep them on. Do I need to keep them on as employees? Because I'm having a hard time keeping and meeting demand for my product because everything is costing more money and I can't produce this product. And going to the bank to borrow money to help me to meet these demands is not going to help because they're going to charge more interest. Okay? Case in point, do not try shipping goods from overseas. Mike, I have a company specifically that deals with shea butter from a cooperative that I work with in West Africa. And there was a time I could, in fact, ship this product, what I would call affordably. But thanks to the war in Ukraine, which impacted on oil prices, which comes from Russia, try to ship anything over here. Very expensive. I mean, like 400% more. It's unbelievable. So what does that do for the economy of the people that are trying to make money off this shea butter? Well, it creates a problem because you can't ship, and if you can't ship, then you can't sell. And if you can't sell, then they can't make any money. Now, you say, but can I go to the bank? And I'm like, and what is your collateral? Oh, shea butter. No. Banks do not like lending against raw goods. Well, maybe I can do something. Well, you can collateralize your house. They'll take that. Or you can try SBA and see if they'll do something. But it's a tight walk because of inflation. And also because we are on a reserve, in a war. But the issue of fractional reserves, ladies and gentlemen, is highly controversial globally because you have the ability to leverage more money than you actually have. And that is a problem. In fact, it's more than a problem. It caused the failure of 3 banks. because they cannot win against inflation. They cannot win against fractional lending is crucified under inflation. If you will do the research and you will look at the number of banks right as we speak at the time of this show, you will find out that we thought we had problems. As the president of JP Morgan said, it's basically, he paraphrased, it's not over. No, it's not over. Now, how does that affect you? Well, your deposits, if it's under $250,000, you should be okay. I'm sure they're going to have to extend the amount. But here's the piece. If banks are perceived as risky, people are not going to go to them to get money. They'll work it out with their family and their friends, or they'll contract their business model and not do as much. Now, the Fed says we want things to contract, but do you really? And how much? And do you want companies going out of business because they cannot afford this? They can't. So, what am I saying? Well, we all know that First Republic Bank was purchased by JP Morgan, I think, for either $30 or $50 billion. But where did they come up with the money? The Fed loaned them the money to purchase the assets, the ones that were alive, of this bank. Like I told you, nothing is free, even among friends. Nothing. And so JP's fine. They said, oh, this will get worked out. It'll filter through our system and it'll get worked out. But my challenge is going to be, as we go down this road and more banks are compromised because of inflation and because of this fractionated lending and the reserves, what is the bottom line? Well, I'm going to tell you right now. Here's the bottom line. The bottom line is that we have yet to see how bad it's going to get. I would say to everyone, don't be a pig. Don't be a pig. Focus on you. The shareholders in these banks that went under too. Because buying stock means just that. You get a chance to play with risk. Not saying it's a bad thing. I'm saying it's the undercore of America. So if you've got a ton of money in equity positions in banks, maybe you need to look at that. And maybe you need to see what their audit results were this past year. They're in audit going in forward this year. You may want to look at that and you may decide, I don't want to do that. Okay? Because nobody's required to save a stockholder. I don't care who it is. They're not required to make you whole, figure you out. They're there for the depositors to make sure that they don't have a heart attack about their money. We've been through the 30s. We know about the Great Depression. We know about the number of people that went under with banks that failed. We know these things because we've experienced them, and that's why we have regulatory oversight. But saying all of this simply means watch your fanny. Watch your fanny. If you got CDs, you better know what bank it's in. You can check out Keefe Bruyette, which is what I grew in the industry, checking out their numbers. You can check out other resources on what are the bank metrics. Just don't say, well, I'm buying a bunch of CDs from all over. You better know the bank that is underlying or underwriting those CDs, because you may have problems there as well. It's complicated and it's complex, but I wanted to give it a first try to make sure you understand. Banking is the connector between people and stuff that makes capitalism work. Always has always will, unless things get crazy. And they may, I don't know, they may. But in the meantime, you watch out for yourself, you ask the questions, and you be careful with your money. I'm Michelle Graves. I hope you've enjoyed this educational session today. It's not all inclusive. I could have gotten into a lot more detail, but in an hour, I can't. I don't have enough time. But at least you now know and understand. How do they make profit? You deposit, they pay you 0.5%, they make a loan for 20%. The difference, known as the spread, is their profit. That's how they do it. They take your money and make money on your money. Yeah, all over the world. So this concludes today's session on banking, the banking industry, what's next, and I'll talk with you later. And you take care of yourself and your family, and don't be so daggone gullible, okay? Oh, I love my teller. What does that have to do with business? Oh, my branch manager is wonderful. What does that have to do with your private business, your money? Enough said. I'm done. I'll talk to you at another time. I'm Michelle Graves, the Money Lady, and looking forward to having you being a part of my world in the days ahead. God bless you, and thank you for listening and viewing in. Bye-bye.